Welcome back to Neil Invests. So today we're going to be looking at two great dividend stocks in the UK. So I believe in these businesses so much that I've been invested in one for a while, and as a result of the research I've done for this video, I've actually bought into the other. On this channel, we look to track against all my portfolios as I'm trying to reach financial independence in the next 11 years. So we do stock analysis, we do really transparent portfolio updates where I detail all of my buys, all of my sells, and the reasons why I've done what I have done. We also cover a number of different investing and financial areas of interest. So if it's of any interest to you guys, please do consider subscribing. So when I'm buying dividend stocks, I am looking for four key things. The first being that it is an essential industry. So that, in a sense, makes it recession proof. So if you've got an industry that is essential to the running of a country, to people's day-to-day lives, that in its essence makes it an essential industry and means that it is going to survive any sort of dip in the market. It's going to keep growing year on year. Number two is an economic moat. So what advantage does it have over its competitive set that sets it apart? So number three is a strong base. From here I'm talking about financials. So it's got great financials, it's got a great balance sheet, annual and interim reports come out and they make for good reading every time. And number four, for a dividend business, of course, it's got to be a reliable dividend. It's got to have a history of paying. It's got to have a history of growth over the years, and it's got to be safe into the future as well. So if you've got all those four things, then you're off to a pretty good start in terms of dividend investing. On top of that, if you are investing into UK businesses, you avoid all of that nasty tax business and the implications of that as well. So at the moment, that's why I'm looking into UK dividend payers. So first off, as I said, one of the businesses I do own and one of them I don't. So in order to be able to fund the purchase of the business that I don't own in this update, I made a sale. So I had high hopes of this business. It had a great dividend, was really diversified across a number of different sectors and had a lot of cash in the bank. Then it got rid of the dividend. It didn't cut it, it got rid of it. Proved not to be recession proof because actually it significantly declined during the recession that we saw last year and hasn't really recovered since. And the balance sheet started to look god awful. So I'm talking about ABF, Associated British Foods. So I got this one wrong, I'm afraid, and we can't get them all right. That's what happens. It's around being aware that when you got it wrong and cutting your losses when you can. I sold it this week. I ended up just a $5 down. So that's a really good result as far as I'm concerned in terms of the business that I'm selling because it's not doing what I want it to do. And with those funds, I bought dividend business number one in this update, Legal and General. So Legal and General provides insurance products in the UK, the US, and internationally. In fact, actually, there are four different segments within the business. We've got retirement, we've got investment management, we've got capital, and we've got insurance. Right then, ticker symbol is LGEN. We've got a market cap of 16 billion and a PE ratio of just 12. So that could indicate that it represents really good value at the moment. And it is currently paying a dividend at 6.5%. So that is a really decent return, but how safe is it? That's the most important thing in terms of its future growth and potential. So we'll have a look at that in a minute. Dividend is paid twice a year, so that's not unusual for a UK business. That's typically how they tend to run. Now you might look at the chart and think, oh shit, I've missed the boat on this one. But as I've said before, the chart is one of the last things that you should be looking at. So sure, if you'd invested in 25th of September when the stock was at 148 pence, you'd be pretty pleased with yourself right now. But if ifs and buts were candy and nuts, and I don't know what the rest of that saying goes, but I'm pretty sure what it's trying to say is don't worry about stuff that you have no influence over, that's in the past and you can't do anything about. I think it still represents really good value given its metrics. Look at the numbers, for example. Nice and steady growth. Big numbers. Profit not increasing quite as much, so there must be an issue with costs, but still nice big numbers. Nothing here to worry about at all. Really nice dividend growth as well over the last few years. Don't forget, past performance is not an indicator of future growth, but this business looked to have all its eggs in order, and I'm really happy to be investing. So long as nothing changes drastically within this business and the numbers that we're seeing right now, I'll be looking to hold this for a number of years. So here is the purchase that I made in this business this week. Just to prove to anyone out there who doesn't believe me, I'm completely transparent in everything I do in my portfolios, but here it is just to prove it. Number two, then get yourself ready for this one because this is one of my favorite UK dividends. I bloody love it if I'm honest, and that is Aviva. So ticker symbol AV, a dividend that pays at 6.5% and a PE ratio that's currently sitting at just 7. So there's not many multiple billion-dollar businesses out there that are trading at a PE ratio of just 7 at the moment. So it could represent really good value. On top of that, I invested into this business back in October. So I've seen a growth of 40%. So I'm really happy with that. Those are crazy numbers for a dividend business. So let's have a look at numbers then. So it's grown from 25 billion to 30 billion revenue in the last 5 years. Its profits have grown from 2.2 to 3.1 billion in 5 years, but the stock is down 1.05% over 5 years. So how does that make any sense? Doesn't to me. All the numbers are going in the right direction, and that is an indication how you can get really good value in the industry if you look hard for it. It's got a really strong leadership team as well. So I'm fortunate enough to be friends with the data strategy director there. Don't even know what that is, but he tells me nothing but good stuff about the business. He says it's got great future potential. He really believes in the management, and he has invested himself. As an aside, if you do happen to know anyone in a business that you're looking to invest in, tap them up, find out where you can find out how stable it is, find out what their thoughts are on the future growth, find out what their thoughts are on the management. Are they making crazy decisions? Find out what you can. Of course, try and avoid insider trading, goes without saying, but find out what you can find out. That's a really great way of getting some information around these businesses. Here's my holding. I've had 2 lovely juicy big dividends this year. It's a biannual dividend payer. Don't forget that means twice a year. And in fact, this has been the highest paid dividend business that I have within my portfolio this year. So it's really returned well for me in terms of growth and in terms of dividends. Again, I love this business, and it's not one I'm going to be looking at selling anytime soon unless nothing changes fundamentally or drastically in terms of the numbers that we can see here. Obviously, this is a real snapshot. I like to keep these videos nice and condensed these days so that I've not gone into any detail. If you are looking at investing in these businesses yourself, please do your own research. And if you haven't already, please consider subscribing, and I look forward to seeing you all again next time.